Hello, good people. This is now EURUSD weekly outlook for 9 June 2025. So, these chart drawings that you can see are from my monthly analysis, which I recently posted on YouTube. So, please refer to my YouTube so that you can get the monthly outlook. Then you follow up on the weekly as we go down. So first things first, it's the order flow, right? What's happening in terms of the highs and lows in the market? You can clearly see that lows are being broken, right? Partially. Then highs are being broken truly. Excuse me. And you can also see that candle lows are being rejected and candle highs being broken, right? Candle lows being rejected and candle highs being broken. So truly the market is bullish. You can see that the bullish fair value gaps are propelling price upwards, whereas the bearish fair value gaps are being broken and being used as an inverted PDRA to again propel the market upwards. And so the market is clearly bullish. So whether you're being subjective, whether you're being objective, market is definitely bullish. I always say this again and again. When you're doing your price analysis or your y-axis analysis, you can be very confident, right? Of course, because of your logic, but you can never be most certain, right? But I can be confident in my predictions. And so another important price action detail is the up close and down close candles. In a bullish order flow algorithm, you expect the bearish candles to be used as a propeller for price to continue upwards always, whereas the bullish up close candles, you expect them to be truly broken and tested as an inverted PDRA to further propel the market upwards. So yes, indeed, ladies and gentlemen, EURUSD on the weekly is bullish, but rather order flow is not a standalone in price analysis, right? You have to be able to integrate with other vital intricacies and protocols in order for you to come up with the best logical evaluations. And so as we came off from the monthly, you can see that my draw of liquidity was towards this FVG down here, which is actually a short-term low right there. And price recently made this significant expansion swing to the upside, whereby price has clearly left an imbalanced piece of price action right there. So you would expect to see price at least come down to balance this piece of imbalanced price action, then continue to go upwards, right? So with that said, I can have the same conviction of sell side liquidity on the weekly as well, mainly towards this low, right, which is my higher time frame fair value gap. Yes, and as we know, that price, if it's in a bullish it's in a bullish condition, then you expect the lows to be rejected every time before the market propels upwards. So definitely I cannot expect price to keep on continuing without at least taking out this low or that low, preferably. But however, yeah, that's what I'm looking at. Then here on the weekly, ladies and gentlemen, we can also see that price formed this candle range below a major higher time frame key level, right? And this candle range has been used as a framework for the past 4 weeks, being able to cultivate some good trade ideas off from it. Okay, let me just clear that out. CRT high and CRT low. Clearly seeing that price was moving and revolving around this candle range framework, and this candle range framework refined my bias and drove liquidity to the downside or to be bearish. And most certainly price reversed off the 50% right there. You could see price reverse from there, right, meaning that there's a potential possibility of seeing price liquidate this high, like I said on the monthly, right, that this is also another possibility to see price liquidate this high because of order flow. And if this high is liquidated, then the 6-month FVG opening wouldn't be expected to hold price any longer. So this very red line acts as an invalidation point. And another thing, as we can all see, is this SMT, a discrepancy on euro and the pound sterling. It suggests a possible bearish movement to the downside. And so as for my weekly, I'm most likely expecting to have a weekly bearish candle, right? And another thing, my monthly OHOC, what's going on, as we can all see, is that this was the first week of the month, to June, and you can see that the first week went on to mitigate the 50% of this rejection block. And you know that rejection blocks are important because they are a lower time frame imbalance, they are lower time frame PDRs. And so the first week reached the 50% of this rejection block. So you know that with the basic knowledge of market profiles, if a range occurs within a key level, you're most likely to obtain a reversal or an expansion, which is a reversal without a manipulation. I hope you understand that. So I'm most likely to evaluate my bias to be bearish for this week, second week of June, without seeing a manipulation above here. meaning that if I see price manipulate this high at that point, I'm most certainly gonna start having doubts for this very FVG to be filled anytime soon, I should say. And when we are talking of draw of liquidity, I always say that if I'm expecting price to reach a certain level, it's not about the certain level which matters, but it's how price is going to reach that certain level. And that's where key levels come in. That's where key levels become important. So if price is going to go for this red line, which is my invalidation point, how will price reach that point? You can see that we have this down close candle, which is important, that price respected that filled the previous down close candle, right, which is filling liquidity, meaning that this candle is very, very important. If price is gonna reach that place, it has to be from this down close candle, meaning that this can become my most convenient short-term draw of liquidity if price is gonna reach that high. However, I'm still in my candle range framework on the weekly, and I still have conviction for price to reach my CRT low, right? Of course, the 50% was already reached, but since price is still respecting this framework, I can still use it to come up with my bias and draw of liquidity. So that's what I can say. So ladies and gentlemen, my most convenient draw of liquidity for this week is the opening of this down close candle, right? And then after that, maybe possibly the rejection block, right? The opening, the equilibrium, the opposite end or the low of the candle. These are all my targets for this week. And in terms of my bias, my weekly bias, the direction of the weekly candle, my evaluation is for it to be most likely be bearish. So that's it for the weekly, ladies and gentlemen. I'll be giving you my daily and possibly intraday, right? So consider this as an appreciation for my followers, and please subscribe, like, comment, tell me if this makes sense, if you want this, if you found this helpful, right? And if you have comments, if you have questions, you can ask in the comment section, or you can join my group, get my contact from the group. You can message me if you have any opinions on how we can make this even much more better. But still, I need to know in the comment section if you find these outlooks useful, so that I can keep on setting them in the future. So cheers everyone, thank you.